Vineet, hi, good to have you with us. How have you been?
I'm wonderful. Thank you so much, Ashu, for having me here. Glad to, talk to you.
Vineet, I am, I'm a fintech enthusiast, right? I mean, I think, like somebody classically said, right, that every company will eventually be a fintech company, right? And I kind of thoroughly believe in that, right? I think there's just such a great possibility, right? Right. And thus this conversation becomes interesting. Also, the fact that I started my career within the private banking space in the product side of things, right? And a large part of what I did was essentially help people manage their money better or design products which help people manage their money better, right? And I think here we are, and I think stock market has kind of been a very critical piece in the entire scheme of things, right? When it comes to wealth management, when it comes to wealth creation, right? All of that, right? And I think it's been there for the longest time. And thus this conversation becomes interesting because you're somebody who's very in a very pivotal position, right, to essentially help one spread that awareness, eventually people going out and creating that value for themselves, right, with right kind of financial literacy. And I think these are some very, very important aspects. Thus the session becomes very exciting in that sense, right? So looking forward to the session.
I was also looking forward to the session, especially because I saw a lot of your interviews which were with other fintech founders, and I realized your depth of understanding of the subject. So I really appreciate that and looking forward to it.
Thank you for the kind ones, right? And I think Vineet, before we dive into the session, right, I'd love you to take us a quick round of introduction will be helpful. And I think then we start talking about StockEdge, right, and all the great work that you were doing.
Sure. So I am as we were talking before the session, that I am from Calcutta, a city I love personally because of the food and the people. And my entire company, now we have around 200 people in the company, and we have built the entire company in Calcutta. We are 3 co-founders. I am Vineet Patawari. My other partners are Vivek Bajaj and Vinay Pagaria.
Right.
So we created this company where we have 2 products: Elearnmarkets, which is financial market training platform, where we have 200 plus experts from all across the country who are training people on various aspects of financial markets.
Right.
So we are a platform, we are a marketplace for financial education. Right. StockEdge is a tool which people can use for decision making in equity investment, whether direct equity or through mutual funds. So we give in-depth analysis, and we give decision making support system, right? Wherein people, basically the idea is to empower the DIY generation for investments. So that's what we have been doing so far. And as I said, that 200 plus people, and we are slowly building this company. Very recently, we got funded by Kotak, Kotak Securities, which again is into the same field, and people know, I think, right? So the whole idea is to now inbuild transaction also to complete the piece of the investment tech.
Fantastic. Vineet, anybody who's doing stocks, right? I mean, I think a large part of that entire journey, and I think is the motivation, right? And I think, and that's very critical, right? I think from a startup standpoint, and I think also the fact that given advisory is a patient, is a business of a lot of patience. They require a lot of patience, right? It's very, very important that you love that space, right? From that standpoint. Tell me a little more about the journey, right? In terms of, how did it start? Tell me a little more about the founding team, right? So, for example, the other 2 co-founders that you mentioned about, right? What are their backgrounds in the process? How did the team come together? Tell me a little more about that phase of the business before we dive into, talking about Elearnmarkets and a little more about, the StockEdge side of things, right? I think it would be interesting to know a little more about that construct.
Sure. So what happened was, we all 3 are chartered accountant, all from Calcutta, right? And while we were doing our studies, we realized that it's very important for people to understand financial markets. It was part of our curriculum, but the practical side of it was completely missing. All right. And there were very few mentors who could actually train people, but they were extremely expensive, and very few, and very most of them were in Mumbai. So we realized there should be and when we looked at the entire scenario, the financial inclusion was low, financial literacy was low, right? And the participation of people in financial markets was very low. And even if we take the benchmark of the number of demat accounts, most of them were lying inactive, right? Because people were not trading or investing directly in market. So hardly 2.5% of the entire country's this thing was active, right? So in a country of 130 crore, hardly 2 crore people were involved in equity markets, right? So we thought that there is an enormous possibility of wealth creation which is not being utilized, and actually people are losing money, the wealth gets eroded, and you stay away from market all the time. So the idea was to simplify financial markets for masses. And there is another story, Vivek, my other co-founder, he has got a hardcore stock market background, and he used to use Bloomberg. I have also used Bloomberg in my professional career, and Bloomberg gives you, it's a ocean, I can tell you, right? So when you use professional Bloomberg screens, you understand how much depth is there, and you have a natural advantage when you have that kind of depth of information and timely information. Right. And we thought that even now people, Janta, normal people, retail investors, they also need something like this. But Bloomberg was obviously out of reach because it was extremely expensive. So we wanted to create an ecosystem which can simplify financial market investment. So learning became the most integral part of that. And we launched Elearnmarkets first, and subsequently we launched StockEdge. So coming to Elearnmarkets, now it has 1 million plus registered, verified users, or you can say learners, right? And we have 200 plus experts who are taking various courses, with us.
That's amazing, right? And Vineet, I think I'm kind of naturally sort of intrigued to ask, right? I think you kind of alluded to this particular aspect, right? That there's been a very small participation in terms of equity investments. I mean, I started, like I said, right at the beginning of the conversation, I started my career within the private banking space, right? And I think one thing which we were constantly, it was a very difficult phase, right? Because India has been an extremely shallow market, right? And I think that's something that I think everybody who's into the stock markets understands what that really means, right? And we've continued to sort of believe that financial literacy is something which is so much more important, right? And I think today in the digital ecosystem, it's just become so much more important, right? The fact that today you can trade on phones, through phones, there are apps that have come in. It's just so much more easier, right? It's very, very agile ecosystem, right? But I think the literacy part of it continues to be the bigger miss, right? There is a huge perception that gets built, right? I mean, what we've been seeing is a kind of a bull phase of sorts, right? Where there has been a constant sense of, enthusiasm, euphoria, positivity, right? Around the possibilities India as an economy. And I think, but I think very few people really still understand the dynamics of trading, right? In terms of how value creation happens, right? What long-term, for example, investing is, what short-term investing is, what intraday trade is, margin requirements, so on and so forth, right? I don't have the numbers. I mean, I have larger numbers. I have macro numbers, right? In terms of 3% of savings is essentially going into equity as an instrument, right? And that's been the case for over a decade now, right? But what's the larger upskilling market like? I mean, when you sort of say cut India as a market, and it's a fairly diverse, complex market, right? What kind of an opportunity do you see exist, right? I mean, how many people do you think, from say a developed market perspective, right, should essentially be participating in Indian equity markets, right? What's your sense of this? I mean, how do you look at the market from that standpoint?
Yeah, so you were given an overview of what was happening before, pre-COVID. Post-COVID, the scenario is going to be, it's already very, very different from what it used to be, right? So post-COVID, what has happened is there has been a huge upsurge in the number of people who got their accounts opened, right? So in last 16 months, there had been 1.5 crore new demat accounts open, which is approximately a jump of around 25 to 30% of the entire base which we have built from last 30 years, 40 years. All right. So one single year has been a game changer, and this trend will continue. All right. With the with new kind of players coming into the picture, which are creating way for the DIY generation to come into the market. So the first thing which will happen is people will start participating in market. Right. And this will obviously follow with the light kind of learning which they'll need to have. At our end also, I tell you, we are approximately at 1.5 million users right now. And last 1.5 years, we have jumped from around 300,000 to 1.5 million. So
Mhm.
approximately
Wow.
5x jump in last 15, 16 months.
Interesting. Right.
Right. So, and that's the scenario with the entire industry also, right? If you
Mhm.
look at the number of accounts open. So my point is, this year, the COVID period has been a catalyst, and this will going to be there, right?
Right.
The participation of financial markets is going to surge from here.
Right.
The entire investment tech industry will actually facilitate more participation of people who were still sitting on the fence or
Right.
probably never thought of investing.
Right.
Because when there is entrepreneurship passion, right, they attract more and more people, which was
Right.
actually missing with the
Right.
traditional brokerages. It was like, it was always like you were scared because you don't know, they'll
Right.
take you for a ride. So which is changing very, very fast with
Right.
zero brokerage, with zero tech glitches. If you still look at the traditional brokerage platforms, right, the glitches, you will be astonished that they still survive with that kind of tech. But
Right.
that's obviously there, and things will be very, very different from here on. And
No,
this
no,
upskilling, yeah, sorry.
no. I think I completely agree with what you're saying. Right. I think the entire DIY culture is kind of, it's been absolutely phenomenal. I think the good part is that that entire older brokerages used to be extremely difficult to sort of deal with. Right. I think I particularly found that entire paperwork to be extremely cumbersome. Right. You have to sign those long contracts and so on and so forth. It was just so much more cumbersome, right? And I think people possibly because of all of that, people kind of deferred the possibility of participation, right? While they of course wanted to participate. And I think newer world tech companies, right in the wealth space and in the equity trading space, have kind of really democratized that in many many ways, right? Vineet, I want to touch upon some of the courses that you're offering, right? That's because that's very very critical, right? I mean, because there is when you talk about stock markets, when you talk about equity markets, so I think instruments in general, right? The foundational thesis has to be set correct, right? I mean, you have to look at, specifically in stock markets. I mean, you have to understand a lot of fundamental, for example, fundamental analysis is something which is very, very important. Something that a lot of people can learn, need to learn, because it just helps to understand better, right? But then, of course, there are intricate courses as well, which are around technical analysis. One thing which has become, visible is that a lot of people are actually picking up interest in technical side of things, right? What's been your understanding of it? I mean, so my first question is, what are the kind of courses that you're offering? Second, what's your sense, right? Are some very specific technical courses within the investing space, picking interest or getting interest from investors across the board? What's your sense of this?
Yeah. So the first question, what kind of courses we have? So we have around 300 plus courses on our platform, and
Mhm.
what we do is we try and create courses, and we try and curate courses
Right.
on every aspect of financial market, right?
Right.
See the traction and get more courses on the topic which is getting more traction,
Right.
right? And we also try to get an audience which might be kind of interested in different kind of aspects. For
Right.
example, the latest thing is cryptocurrencies
Right.
within the fintech world,
Right.
and people need to know it.
Right.
NFTs, right? So we are curating courses on those aspects, right? And we are also trying to bring in audience for that, because
Right.
see, stock market audience might be very different, and if I launch a product which is not meant for them, probably I'll see no traction on my platform. So I need a different kind of audience to come in.
Right.
So what we are trying to do is go broad based on
Mhm.
the kind of courses which we have. The other thing which the technical analysis courses specifically.
Mhm.
So what has happened is, because of this whole quick money,
Right.
which people want to make, this day trading has
Mhm.
been from last 2-3 years, we see that
Right.
there has been a huge upsurge,
Right.
right? The technical analysis courses which we have are always more popular than the fundamental analysis, because in
Right.
fundamental you need delayed gratification, you need to long
Right.
term, right? Not all have that kind of vision, and
Right.
typically people who have that vision, they kind of will do those courses and
Right.
will stick around and will be learning, continuously learning.
Right.
Technical, it's like you learn one time and you want to start trading from tomorrow. And so we have a lot of courses on that, and they do
Right.
very good in terms of, they are actually the monetization source for us,
Right.
right? And we get very good feedback on all such courses. But
Right.
the point is, every trader will have a different strategy.
Mhm.
So what we did is we introduced a lot of micro modules. So
Right.
we got the best of the experts across the country on financial markets, and we created a couple of hours of modules, which
Right.
we made available for $500,
Mhm.
right? A particular strategy which they used to share for, let's say, 50,000 rupees over a 2-day workshop, we got it down to 500 rupees in a 2-hour
Right.
webinar,
Right.
right? So
Right.
we have 300 plus webinars on our platform. Each webinar talks about a very specific strategy which you can learn today and start implementing from tomorrow.
Right.
And that's very suitable for people who want to, who are actually trading, who don't have time. Over a
Right.
weekend, they'll do a 2-hour webinar.
Sure.
And from tomorrow, they'll start implementing something new. So
Right.
this upskilling, which was till date, I want to learn technical analysis and I want to trade. We converted it into, you first learn technicals and
Right.
then you learn strategies every weekend, right?
Right.
And you just pay $500.
Very
So
interesting.
that model actually worked very well for us.
Very interesting. In fact, this is the next question that I was coming to. And, and can I be honest with you, right? I mean, I come from a finance background. For me, fundamental analysis is something which was like a natural part of it, right? You kind of learn that through the course of your education, right? Technicals became extremely complicated, difficult, right? And technicals are not easy. Technicals are something which is extremely time consuming, right? You have many factors that are getting represented just about very few variables, right? It just becomes difficult in that sense, right? But I think with what you're saying, possibly, is an amazing shift, right? Because for a lot of people who don't come from a finance background, right, technical is something which could just be picked up much faster, implemented much faster, right? And personally, that's a revelation, right? And I'm going to dig you further on that in just a bit, right? But before I do that, I mean, you mentioned about durations, right? Right. So you essentially mentioned about smaller durations, shorter durations, right? Are all of your courses paid for? Are some of them for free? What's your funnel like, right? I mean, where do you basically how do you evangelize, right? And then eventually convert a lot of these people into paying customers, right? What's that journey like? Tell me a little more about that.
Yeah. So Elearnmarkets is, whatever we do, it's a freemium model,
Okay.
right? And as I told you, we have multiple courses. And what we try to do is, see, I'll give you one of my GTM strategy.
Sure.
So with everything new which we launch, what we try to do is we launch something free, which is like a trailer, which gives a good amount of understanding of the subject.
Right.
We bring in people based on that. And then we bring in experts in that area.
Right.
For expert education, you pay.
Right.
Right. So either we charge for, when there is an expert who demands that kind of value,
right,
or if it is a certification course. Otherwise, we keep it free.
Okay.
So financial market education is made free.
Right.
50-60% of our entire content is for free.
Right.
We have created a huge repository of text-based content, entire financial markets.
Right.
You can learn everything for free. It's called ELM School. Within our platform, there is a concept called ELM School. So what we are doing is trying to onboard a lot of users who are learners through the free content. Right. And then we upskill them through either experts or very specialized certification programs which are there. So that's the funnel which we build.
Very interesting. Vineet, a big problem in India, right, is essentially that there are many creators, right? There's a lot of content which is getting created, right? And I'm sure you understand what I'm kind of referring to. YouTube becomes the mechanics, right? And like I said, a lot of people are putting up a lot of content, right? Now, what happens in a market, right, which has essentially very small or negligible base, right, when it comes to investing, and investing is something that everybody wants to, there's a natural tendency that people want to pick up, right? Because, your money is just working for you, right? And I think eventually people want growth in that, right? The problem in an environment like this is that, there are, like I said, right, I mean, there are many people who are creating a lot of content, right, which might not necessarily be of that quality and caliber, right? But given that this is free, right, and in content business, more is more, right? I mean, nobody really owns the customer, right? With all of that, content available, it just becomes very difficult. I mean, it might just be very confusing for many of the people who are watching this, right? Do you think that's really happening, right? And doesn't that makes it difficult for a player like yourself to kind of steer through? I mean, how do you differentiate yourself vis-a-vis a lot of what is happening in the market, right? The other thing is, are these speakers that are there on your platform, are they exclusively available with you, or are they doing their own content as well through other channels or independently?
Yeah. So the first part, in terms of the confusion which might get created because of the plethora of content which is available everywhere, right? What we try to do is we try to create journeys for different personas, right? So for example, a beginner who has just come from the markets for the first time, he might have very different requirement of understanding stock markets compared to someone who is there from 20 years and a hardcore investor, or maybe a person who is an intraday trader. All of them will have different journeys. Right. Or something who is very curious about what cryptocurrency is and wants to start trading maybe later on that. So everyone will have a different kind of journey. So we try and create those journeys, and we try and bring people in those journeys step by step, so that we can, it's not confusing for them, it's not complicated for them, because our whole idea is to simplify things as much as possible for them. Some pieces of it, because see, in when you talk about financial markets, a base building is required. So the freemium content, the free content which we are giving at the onset, it's for the base building, right? Once the base building is done, the second step is they want to upskill now. Right. For that, we can monetize and we can charge. Right. And in terms of the experts whom we onboard, we do a lot of due diligence based on their performances as an investor, as a trader, right? Because what happens is there are a lot of people who have never actually done too much or too good into markets, and they come just as a trainer. We try to avoid such people. We don't need professors out there. We don't need professors over there. We need people who have been practical traders and investors who can share their ideas and experiences, because people relate to them more than if you teach them theoretical stuff. Right. So we try to keep it as practical as possible from people who have been practically doing it day in and day out. Right. So that's what people like. And in terms of exclusivity, we don't restrict our trainers to be exclusive at our platform, but rather the trend which I've been seeing is, because we have gone to a level where we charge a very minimal platform fees for hosting of courses. Plus we provide audience also. So they kind of prefer that they do what they are best at, which is teaching people or creating content, and we do everything else, including maintenance of technology, learning management system, support system, and so on and so forth. So we are trying to create an environment where a trainer can just come in and tell us that, if we also support people in recording courses, in very high-end studio-based recording with animations and all, so that so end-to-end we manage. So you do what you are good at, communicate, interact with people, answer their questions, create content. We'll help you in all of that, and we manage everything else, and we charge a nominal platform fees. So people generally don't want to be at different places. They want to be concentrated in one area, and there are very few platforms which are getting developed in such a way. So till now, it has been a good journey with all the
very interesting creators. Very interesting. Vineet, we kind of, you alluded to COVID, right? You referred to COVID in one of your earlier points, right? In terms of how it's fast-tracked participation of capital in Indian equity markets, right? And I think all asset classes really. I think asset classes are kind of thrived from an investment standpoint. Largely, people had time. They very quickly referred to a lot of online content which was available, and then they started to sort of invest, right? Now, one thing that has happened, and I want to actually talk to you a little about the complexities that COVID has brought, right? And some of those complexities are that we're essentially, it's a reset button, right? The companies, large and small, are going to go through a huge transition phase, right? Consumption appetites are not largely going to be the same, right? The risks that are there in the economy are going to be very different, right? You of the legacy and the leadership that you would build, right, might not last for as long as an organization or leadership thought that it would, right? The new ones are going to come in and they're going to challenge the status quo much faster. What that essentially means is, we have had a Zomato listing, right? Essentially, a very concept, something that is kind of a lot of organizations in India chose to sort of list outside, operate or register themselves outside, largely because listing environment was much easier there, right? This has been a watershed event, right? In many ways. What I'm kind of referring to is that the entire landscape of investing is we are at this cusp where the entire landscape of investing is going to change, and it's going to change very, very sharply, right? What do you make out of this kind of an environment, right? Given all of the education that you're kind of passing on, right? Do you think a lot of this is going to will be required to be done in a very different way, given that the newer dynamics are in? What's your sense out of it? I mean, how do you factor in these complexities, especially from a learning environment? Because a large part of your job is to essentially evangelize, right? And for these guys eventually to be making money. I think any information which is, say, not necessarily correct in terms of helping them understand the current market situations is going to make it very difficult. What's your sense out of this? I mean, how do you break it down at a course level, right? What's going to be the new, for example, say, construct, right? I mean, how do you blend in those aspects to ensure that there is, the investors, the new investors, are able to understand it better?
Yeah. So, I'll take it in two parts. One, the scenario is changing very, very fast. There has been a drastic change in our regulators, the way our regulators work.
Right.
They are now trying to make things simpler for new age companies, right? Mm-hmm. Because I wanted to invest in Zomato, you wanted to invest in Policy Bazaar, right? So what has happened is they allowed this, that even a loss-making entity can list and people can make wealth out of that situation, right? Similarly, if you look at the fintech evolution in the last 5-6 years post Demon, right? Things have been very, very fast moving. You have seen UPI coming in and wiping out a lot of wallets, right? The entire scenario, the entire industry has been going through a drastic change. Right. So the consumers are up and ready, I think, for change in everything they do, from spending to investments to wealth management, everything. Right. And there had been so much of change which people also need to learn. Mm-hmm. Okay. So what we are trying to do constantly is, our most of our courses are hybrid in nature, which is some static recorded content, which also we keep evaluating in some time, right? But then everything is backed with classes, right? Mm-hmm. Live interactive sessions. Okay. So what happens is, so let's say you have got a recorded program which you can take at your pace anytime, anywhere, right? But which is also integrated with weekend classes. So it is a mix of doubt clearing and a new topic being discussed, right? So let's say if there is a course which doesn't have anything to do with, so we are talking stock markets, right? Now Zomato listing. So we can now discuss the regulatory environment that earlier it used to be only profit making with so and so background. Now it's a very different scenario. So now when you look at a company, and when the growth prospects are extremely robust, you at times let go the profitability. Right. You defer the expectation of profitability, and that's why you can invest in such companies. So what we try to do is keep it practical as much as possible, by having these live classes integrated in that. So that's one way we are tackling. There are a lot of other ways which we do. We have integrated interactive learning tools inside every course. Right. So let's say we are teaching options. So option strategies or option payoff diagrams. The moment you learn option, we tell you that, play around with the tool which we have given you, learn how the payoff will change. Interesting. Right. Or let's say if you're talking about EMIs, you calculate and see, we give you a calculator embedded. So our learning management system is not only video based, but has got a lot of interactive learning tools which help people to make it as practical as possible. Right. So yeah. These are
very interesting. Very interesting. One question which was a little outside of our conversation, right? How scared are you, right? How do you view the current situation, right? Of massive liquidity, right? This upsurge in the market, right? How do you view this, right? Because people who've entered, right? My fear is people who've entered this market in the last 1.5 years, right? I mean, everybody's talking stocks today, right? I was in a conversation with somebody who's, I know has been extremely defensive, right? And we were discussing stocks, right? Everybody started to think that they are fund managers of a certain level, right? Because I think everything you're putting your money in, right, is giving you a reasonable return, right? What do you make out of an event like this, right? I mean, what's your advice to people at large, right? I mean, this is not something which is going to last. I mean, it's just an aberration which we're experiencing, right? Because of certain macroeconomic conditions, right? What do you make out of this? I mean, do you think this is a real event? How do you prepare people for, a bad event, right? And we've seen glimpses of that last couple of days, right? What do you make out of this event?
See, there are two things in this. One, the real, as an educator, I'm saying this, that the real learning is not complete in financial market until you have seen a bear phase.
Absolutely.
Right. So we are waiting that whatever we teach for 1/3 of the population, which has come new in the markets in last 2 years, their learning will not be complete until they see a huge correction by their own eyes and they actually experience that. So they have to experience that. We cannot complete that education by any kind of caution which we give them in our content.
Right.
All right. The other thing is we try and explain the events as they progress.
Right.
We create a lot of, we are very active on all social media platforms, including YouTube, etc. And we create a lot of content which is outside our learning, and we try to educate people on various aspects other than our students also. For example, last 2 days, what has happened has a potential of actually getting into a full-blown global recession.
Meltdown. Absolutely.
Yeah, a meltdown, definitely. Right? Because see, 2008, it started from subprime crisis US. This time it can start from China with, with the real estate giant, failing. So it's a very similar situations. Somewhere I was reading that China has more than 50 ghost towns. They created so much of infrastructure with an expectation that the growth will continue. This party will continue forever. But my friend, no party continues forever. And that's the real learning which all the investors and the traders needs to have, which I feel will come sooner or later. So I just tell them that don't get overexcited in anything, but yeah, any kind of caution will only hold them back for a time, because see what is happening is any ghada or ghoda or gadha, wherever you put your money, everything is making money for you in a bull market like this. We have not seen a bull market like this ever. It's a extremely robust bull market, without very strong fundamental economical factors. It's obviously it's backed by a very low base created because of the recession year, because of the last year, COVID year, but still it is, the extraordinary liquidity which is infused in the system, worldwide, has been chasing assets. And when such liquidity chases assets, the good assets of, the good money start chasing bad assets, which has been happening from some time. But I think China is going to be the trigger again. Like for COVID, it was China. Now this meltdown, probably, I personally believe, I might be wrong and might sound little pessimistic, but that's what I feel. It will happen from here. And it's good for learners. I think if it happens, maybe they'll lose some money. But that's, if they lose money early in their career, that's better than, they keep repeating the same mistake and later on they start cursing the market, that ultimately you lose money in the market. So yeah,
that's a very interesting point that you've kind of you've highlighted, and you literally walked into my next question, I mean, do you think it's going to become important to have, I mean, in a DIY condition, especially when you're a new trader, you're entering markets at a relatively bullish in a bullish phase, it's very difficult to hold your horses, like it's classically said. You tend to, because your experience is much lesser, your exposure is much lesser, you really don't know when to sort of exit, when to cut either, or exit that situation, it just becomes very difficult, even if you, for example, have your training on technical data, I mean, technical data it takes a lot of time. It takes a lot of cycles for you to get it right. I mean, it's not something which is, you can learn it overnight, of course, you have few hacks around it, but that still requires a lot of time, Do you think there is going to be a huge, or there should be a huge, emphasis on hand-holding around investing, which could either mean there are newer platforms that have come up, which essentially give you, where there are fund managers who come in who give you basically stock tips where you can actually go and invest, or there are certain portfolios that are made, you can actually go and buy those portfolios, or there could just be advisory channels that are made, which sort of handhold you to understand your say milestones in life, and then help you sort of align, which could be a very different kind of a mechanics, It's a more patient mechanics where you stay put, Ramdev Agrawal of Motilal Oswal has been kind of raving about it, talking about it for the longest time, but that's a very different kind of mechanics, In a market like this, the enthusiasm is very different, and like I said, I mean, when you are talking about DIY, people don't know where to cut off, What's your sense of this? I mean, do you think a lot of this hand holding is going to become very important through the phase of investing? What do you make out of it? And
yeah,
and possibly it's also important. I mean, how do you see that, the role of that becoming important? Is that something that, if you are to advise somebody, given that you are in the stock markets, you understand it much deeper level, is that something that you'll advise people, saying that, go out and seek professional help in an environment like this? What's your sense of this?
See, if I look at an investor journey,
Sure.
I define it in 4 steps. One is, the first step is, and the crucial step is, learn. You need to learn the nitty-gritties of whatever you
Right.
invest in,
Right.
right? The second one is analyze, and you need the data to analyze and make a decision, right?
Right.
The third one is collaborate. In India specifically, we look forward to discuss our investment decisions with our relatives, with our
Right.
friends, and the people whom we believe are experts.
Right.
So collaborate with them. And the fourth piece is, you need the right platform to transact. Right. One good thing which has happened in the last few years, the transaction problem has been solved, and it has been commoditized more or less, right? Which was earlier a big hurdle, right? You always used to struggle how to invest in stocks and mutual funds. It used to be cumbersome, as you said. There were regulatory complexities. Now all of that has become extremely simple. You can open a demat account in 10 minutes and you can start investing. You can today, with the advent of crypto exchanges, the entire exchange concept has become fluid now, right? And you can bypass all the regulations and start investing in asset class, which was just, which got into frenzy in last 1 or 2 years.
Right.
So my point is, on the transaction side, things are looking better, right? The education needs to be tackled, right? Because the new set of investors who are coming in, they need to be upgraded. They need to be continuously made aware of things. Right. And one very good thing which is happening is, with the advent of so many fintech firms, especially the investment tech and wealth tech firms, with various different kind of offerings, a lot of innovation is coming into the system. And this innovation is actually, there are different people who are getting attracted to different things. Right. For example, you have small case on one side, which is attracting people who wanted to invest in equity, not through mutual fund. Right. So it's somewhere in between. Your discretionary investment, you have to make selection. That's one side. Or the mutual fund manager doing it. That's the other side. Somewhere in between, you have small cases where someone tells you that, you do 5 stocks, and there are very many parallels of small cases which are coming up now. Right. Similarly, in options, if you look at options, a lot of data-based, analytics-based platforms are coming up which are helping you. Right. So whichever field you want to, technicals, there are a lot of platforms coming in. Right. So, what is happening is, with this fintech scenario, this is going to stay there for some time, because this whole sector is extremely hot. And I think the biggest beneficiary of this is the ultimate investor. Right. Because he has more options. Earlier, he needs to have a professional to tell him what mutual funds, who used to have vested interest, because they used to earn from the product commissions, right? So they'll sell what benefits them. There was vested interest always. And this led to a very different kind of scenario, very different kind of wealth creation in our country, which was more attuned towards selling products which were more in favor of the distributor. Right. Now this thing is gone, with direct equity, with zero brokerage, with zero mutual fund brokerage, etc. The whole scenario is changing at such a fast pace, and these platforms have no vested interest in telling you that you invest in this particular. So far, it seems, right? So what is happening is, right product is being pitched to right set of audience, and it's more and more discretionary is going out, and kind of robo is coming in. Right? And that robo can be artificial intelligence, machine learning, that can be, through sentiment analysis and so on and so forth. But this is for good. There might be initial glitches, but once this goes in, you will see a lot of people coming into the system without any human intervention. They get the right advice through a robo advisory kind of platform. Now this robo advisory can be a small case also, 5 stocks given to you, or it can be as complex as telling you that you exit this stock, enter this stock, right?
Or it could be algo trading.
Or as good as algo trading also, right? Now there are retail algo trading platforms wherein you can quickly build your algo and back test and see what's happening. Right. So my simple point is, this change will actually bring in a lot of new investors, will empower these investors, and we are also trying to do that, empower new set of investors. to do it themselves, right? And this is going to massively upsurge. I feel there will be a huge shift from that fixed deposit based investments, investing in gold, etc., to investing in financial assets, especially equities and mutual funds.
No, interesting.
So, yeah.
Vineet, I kind of agree with a lot of what you're saying, right? But I still believe, not a lot of people understand the economic complexities that exist, right? And it just is important for them to have right advisors, right? And professional advisors, right? Unfortunately, what has happened is all of what you're saying, right? And in fact, the cost of transaction, for example, coming down, while it's extremely good, right? Because at least a lot of wrong selling and mis-selling is not happening now, right? I mean, there's no incentive of doing that, right? But on the other hand, what has happened is a lot of people who understood, right, who were essentially doing it professionally and as a career, have actually moved out, right? And that is something which is becoming difficult, right? Now, when you look at individual platforms, right, now the possibility of being able to customize is going to be a challenge, right? Irrespective of whatever we say, right? I mean, this is something that I understand very, very closely. You need to understand investors at a very, very up close and personal, right? The financial information on many occasions is distributed. There is very little that you can make out of that, right? It just becomes a very complicated matter, right? But I think that's something that I want to say for our next conversation. Vineet. I'm going to move into discussing Bharat with you, right? Tier 2 and tier 3 India is something which is become a huge narrative in the conversations that are happening, right? I mean, everybody is now looking at Bharat in many ways because the next wave of consumption essentially is going to come from there. Bharat has anyway been investing, across many other instruments. Equity, for some reason, was not like there was always a certain set of people who used to trade in equity, but it was not a mass phenomenon, right? What's your sense of it? I mean, how has COVID changed that, right? I mean, are you seeing a much larger participation coming in? I was recently surprised, right? I was like at a village where there were two people at a function who were discussing equities, right? And that was like a pleasant surprise to me. But what's your sense of it, right? How are you seeing Bharat change?
See, this is related to the previous question which we were talking about, right? I see that the answer to the previous question was very different for tier 1 cities, tier 2 cities in India, and for the real Bharat. So India and Bharat are actually coexisting, but they are very, very different animals. Right? If you look at what's happening with the tier 2 cities, you need to understand that they are still away from the lot of technological advancement which has happened, right? It'll go there maybe in a year or two, but the good part is with the internet penetration, with the mobile phone in hand, this is happening much faster. This is happening much faster at village level also, right? I'll take an example of the penetration of insurance. The LIC, a brand which India created, was created on the back of agents, right? And that happened because there was good amount of incentivization for that agent. Right. Even if you go to a village, they might not have exposure to any financial assets, right? They might, and it can be just LIC, nothing else. They have a LIC policy, right? Someone sold it to them, and every house probably will have a LIC policy in a small village also. Right. So my point is, for Bharat, you cannot survive without physically having presence over there, without advisors, without experts, or local advisors being there and pushing a product, because they need to be educated physically that what's a mutual fund, what's a banking account, what's a SGB, the sovereign gold bond, because they have a connection with gold. You cannot just tell them that forget about gold, but you can tell them that, rather than physically storing a gold, you can now do it through a SGB, right? You can do it digitally. So this kind of education has to go in, right? And the entrepreneurs also like to do things which are favoring tier 2 and tier 2, 3. For example, we created courses in 7 different languages, right? Vernacular languages. And what we have seen is people are very happy when they kind of see it in their own language. This, because see, till now, financial market education has been very restricted to in English, because the newspapers were English, the TV channels were English, everything was English. And stock markets so scary the hi. On top of that, English is more scary for them, right? So they used to stay away from anything which is related to markets. Now what has happened is everything is going vernacular as well. And that's a good part, because there are a lot of regional experts who are creating videos in their regional languages. We are creating a lot of regional and we are trying to onboard all those experts on our platform, right? We have an idea that we want to go to tier 2 with a very different kind of course, right? Where the entire pitch is very different, where we don't assume that they know even the most basic of anything. Right. So it's a very different content which is created in Hindi, Bengali, Tamil, Telugu, Malayalam, Kannada, all of those languages. So, entrepreneurs need to tackle that challenge in a very, very different way when creating a product. So that's what we are trying to do. We have our app called StockEdge. That also we translated. You can have it in Bengali, you can have it in Hindi. Lovely. We are now working on other languages also. So those things you need to do.
Very interesting. Which is one region that has surprised you, right? I mean, Gujarat has, for example, been always very, very savvy when it came to, I think, any kind of investments, right? I think be it business side investments, be it equity markets, be it commodities, but I think real estate, I think it's been a very, very savvy market in that sense, right? Which is that region which has surprised you, right? Especially around COVID, right? And the change that happened. Would love to know.
Sorry, I didn't get that question.
I'm saying, which is the region that has surprised you?
Oh, okay. So, I tell you, one of our largest, inflow comes from Pune.
Right.
Okay. And that's because it's a student city, and there the age profile over there of the students who come in, 18 to 25 is the majority. That's the median age. Right. So that's one surprising factor, that people who are still pursuing their career, education, they want to parallelly learn financial markets. Right. And it's not that it's part of their curriculum and they have to learn being a chartered accountant, I have to learn strategic financial management. It's not like that, right? It's something they are doing on their own so that they are capable of managing their money better when they get out of it, or probably they want to parallelly do trading and make money out of that, right? Something, right? So that's one area. Secondly, another surprising area is this Hindi heart belt, right? Hindi is huge, right? It's beyond our expectation that anything which we do in English, if it gets X, anything we do in Hindi, it gets 5X kind of traffic, right? So we want to focus on Hindi, right? Apart from that, there are other languages which are picking up. On the contrary, see, Gujarati, we always thought that Gujaratis are inborn, like they and we can create content in Gujarati. But then we realized no one is interested. There is a reason, because they understand the stuff, right? And Gujaratis understand Hindi also. Right. And they are okay with Hindi content.
Interesting.
So at least in education side, they might be okay with watching Gujarati news, but not learning stock markets in Gujarati, because they are okay. Abhi tak sab chal hi raha hai. So that's something which is surprising, especially Pune and the student category. There has been an upsurge. Yeah.
Very interesting. I have so many questions around that, right? And I think students are now, and not just students, I think there are many things that are being done for kids, right? For example, there are many initiatives, right? But I think there are certain conversations that we're going to keep for next time. Vineet, towards the end of our conversation. But before I ask you the last question, right? What's your sense of crypto, right? A good thing or a bad thing?
See, there is nothing called good or bad, right? It's how you use it, especially with technology, right?
Right.
So blockchain is an amazing technology, right? And it's going to be there in almost everything. Like you said, fintech is going to be there in everything. Right. Similarly, I feel 3-4 years hence we'll see, and you already see social media platforms based on blockchain. You see health tech working on blockchain, right? So similarly, this cryptocurrency is going to be there, right? I feel it is up there for a correction in terms of the valuation, because again, it's all asset classes have been running like that, especially the cryptos, right? And it's going to be volatile for some time, next few years maybe, right? Before it settles down. A lot of people ask me, don't you think it's a bubble? It's definitely a bubble, right? It's going to burst, like the internet bubble bursted in 2000, right? But internet became stronger after that, right? So it's not a thing which is going to, a bubble which is going to burst and nothing will come out of it. I think a very strong alternative currency environment will come out of it, which will started getting accepted, and in next decade or maybe sooner, we'll see that that's going to be the norm, and our fiat currency is going to be an exception, right? I'm so much bullish on crypto.
That's very interesting, Vineet. In fact, recently in a conversation, and I think it's important to have alternate asset classes, but I'm also of the belief that I think a lot of what is happening is essentially all fad, right? Because one person is
Hmm.
buying it because the prices are kind of
Hmm. Hmm.
they're flying the way they are. A lot of
Hmm.
people are jumping into it without understanding the basics of it, right? And that's a huge
Exactly.
gap area, right? And I think I was in a conversation recently where somebody said that JP Morgan invested about $1 billion in Bitcoin, right, sometime back. um, I mean, and that cannot be a justification of investing in a completely new asset class, because that's a very uh, that's literally lame, right? Understanding, having that foundational understanding is very, very critical, because this is a new asset class which can have a very different kind of swings, right? Which could wipe off a lot of, while of course we're talking about wealth creation, right? And that in a very institutionalized format, right? I mean, this is something which could be an aberration, right?
See,
But
I'll suggest anyone that if you want to try crypto, don't do it more than 3 to 4% of your entire portfolio,
right.
right? And do it with only the money which you are ready to lose 100%, right?
Right.
Because
That's a nice
right now
caveat.
it's extremely volatile. It's
Right.
extremely volatile, and it's going to be like that. And if you do it for learning, because
Right.
it's like, if you don't do it, if you just learn the theory of it, you will not understand what's going on.
Right.
So you need to open an account, you need to have a wallet, you need to understand how is it working, but do it with small money which you are ready to lose. That's all.
Interesting. Vineet, my last question, right? What are the next 2 years like? I mean, you're in an exciting market. Like I said, we haven't seen, the kind of positivity, the kind of bull run, the confidence, right? What are the next 2 years like? I mean, we're definitely in for a much larger base in the country participating in the markets, right, across asset classes. What are the next 2 years like, right? For Elearnmarkets, StockEdge, the entire group, right? What's
Yeah.
the next 2 years?
See, the next 2 years going to be very exciting. That's what I believe. And we want to complete the picture. Right now, we are in learning and we are in analytics.
Right.
We want to get into social investing, which is the collaboration framework. We are building that, right? And that's going to be a very, very exciting piece wherein people can come and interact and discuss with experts about their investments,
Right.
right? So we are saying we'll make you capable to understand what you are talking so that
Right.
you can talk sense. And then we'll give you a platform where you can talk. And when I say talk to experts, talk to your peers, talk about investment, talk about insurance, risk management, so on and so forth, everything related to personal finance. And then if you make a decision over there, you can transact from there itself, right? And we'll also build in pieces wherein people, the decision support system is not only robo advisory based, but also
Right.
discretionary based, wherein an expert can suggest courses. Like it happens a small case, right?
Right.
Every expert who will be onboarded, who will give him a club, and in that club he can suggest the stocks. So he'll have a model portfolio which people can subscribe to. So
Right.
that's kind of on the monetization side. But we'll build a platform or a framework or an ecosystem which helps an investor from end to end in making investment decisions, learning, analyzing, collaborating, and then transacting. So that's the piece we want to complete, and we are working hard on that. So hopefully next 2 years, and plus we want to, in terms of the numbers, we are at a firm level, we are at 2.5 million verified users. We want
Right.
to go for 4x in next 1.5 years. Okay, so 1 crore users and 10 million users, and in terms of revenue also we want to go 4x. So that's for next 1.5 years.
Super. Vineet, you know how I want this conversation to go on, right? But and this is something this topic is something which is very close to my heart, right? I mean, given that I've been very active in it, I very firmly believe that people need to participate. More and more people need to participate in equities, right? Because uh, that's a phenomenal source of value creation, but it's also a lot of relevant financing for many, many promoters, right? And I think that collaboration needs to be thicker than where we stand, right?
Right.
Thank you so much for taking the time out, Vineet. It was a pleasure to have you. I look forward to having another chat with you much sooner, right? Around certain very specific nuances of investing and the complexities that are involved in it, right? Given we're a diverse market, we're a complex market. I'd love to discuss that across our
Sure.
upcoming conversations. Thank you so much for taking the time out. It was a pleasure to have you.
Sure. Thank you, Ashu. It was a wonderful discussion. I think we spent more than an hour or so, and it was such a free-flowing discussion, amazing discussion. And I'll also look forward to having another chat with you. Thank you so
Super.
much.
Thank you, Vineet.
Thanks. Bye.